Hello everyone, George DeSantis here with a look at the market for the week ending September 30th, 2016. Let me just read the disclaimers I usually do. Trading and investing has large potential rewards and large potential risks. So this video presentation is designed for educational purposes only and is not a solicitation or advice to buy or sell any securities or other tradable instruments. You must be aware of the risks and be willing to accept them in order to invest in the markets. So consult a licensed professional investment advisor for investment advice. Let's start by looking at the monthly chart as we usually do. And here's the monthly chart of the S&P 500. It's still in bullish territory. Obviously, the Kalman filter is still above the instantaneous trend line, this yellow line versus the blue line. So the trend is up. It's decidedly up. The parabolic is still below the most recent bar, and so the trend is up. That this bar here was, of course, September's bar. So we wait now to enter the month of October in terms of trading. Now the MACD lines have crossed, and of course, Elder Force index is above the zero line. So all in all, this chart is telling us, as far as the long-term picture is concerned, the bigger picture, the trend is up. Let's take a look at the weekly chart. Here's a weekly chart of the S&P 500. Now, you will recall that 3 weeks ago, I was speaking about the instantaneous trend line possibly being a line of support. And so it seems to be acting as support here because this week's bar hit the instantaneous trend line. And since then, we have had 2 weeks of an up move here, 2 bullish candles. So far, instantaneous trend line is holding as support. As I mentioned, Alex would say, this is a consensus of value. And so the market came back to consensus of value, and now it's moving a little higher. Parabolic is below the most recent bar, and in fact there's a little more distance here, so that bodes well for the future in terms of the bullish scenario. The RSI 12 seems to have bumped off the 50% line and is trending up, so that's bullish. MACD is slightly bearish. It's down 2.95, just below the zero line. But the thing to note here is that we don't have a bearish divergence. If we did, it would be more concerning, especially since it's on the weekly chart. But we don't have a bearish divergence, so it's not unusual to see MACD fluctuate a bit like this. Well, we'll find out if that holds true. Percent R is holding its own above the 80% line. So the momentum is strong. And again, we saw that the weekly chart is trending up. The monthly chart is trending up, and the weekly chart is also in an uptrend. Let's take a look at the daily chart of the S&P. Here's a daily chart of the S&P 500 that we often look at. First of all, we should note that the 9 EMA has just crossed above the 30 weighted moving average again as of Friday. So that's bullish. That is signaling that the uptrend is resumed, or we have resumed the uptrend. We have an inside bar here, or what the candlesticks would refer to as a bullish harami. This body of this candle is completely engulfed by this body of this candle. In addition to that, some time ago I drew a symmetrical triangle here, A, B, C, D, and calculated the target from the high here of E, which was 2145. We came up with a target of 2192, pretty close to 2200. Well, we were able to plot another triangle here, this triangle that you're looking at here, and from B all the way here. And if we take this high here, in other words, like similar to this position E here, if we add the difference between A and B to 2175, we come up with a target of 2222. So just above the 2200. Well, let's see, of course, if we do get there. But these bullish triangles at the top of an uptrend, which we've had, except for when we went into this drawdown here, usually is a continuation pattern. These triangles are usually continuation patterns. So we'll see how that develops. The parabolic is below the most recent bar, Friday's bar, so there's no indication to switch the direction of a trend. RSI 12 is once again crossing above the 50% line. That's bullish. Williams pro buying indicator, although we've had some volatility, some ups and downs, whipsaws, it's once again above the zero line. And at the bottom of the chart, percent R is above the 50% line. So all of this looks well insofar as the bullish scenario is concerned, and the daily chart is also looking pretty bullish. Let's take a look at something else. Here's another daily chart of the S&P that we often look at, and what we can see here is that the instantaneous trend line was crossed by the Kalman filter. So the Kalman filter is now in bullish territory above the instantaneous trend line, signaling that we're in an uptrend. And as we saw on the previous chart, parabolic is below the most recent bar. We have this bullish harami or inside bar. We should go higher from here. Insofar as the expert indicator is concerned, the expert indicator is telling us that the market is currently in a cycle mode. This is the first bar of a cycle mode. Best strategy is to go flat and wait for the next crossing of the sine wave indicator. Well, we're in a cycle mode. We could see that, we've had these choppy trading days here, but the other indicators are certainly looking pretty bullish. At the bottom of the chart, you can see that MACD is now in bullish territory on the daily chart. The fast average is above the slow average, and the histogram is above zero. So let's take a look at something else. Here's a weekly chart of the NASDAQ composite. And so as we look at this, we can see that Kalman filter crossed above the instantaneous trend line way back here, back in February. And since then, it's tested the instantaneous trend line and has moved higher. It made a brief foray to come back to the instantaneous trend line, but since then it's trending up. So we've had two pretty bullish weeks here after this piercing candle. At the middle of the chart, we can see that RSI 12 is above the 60% line. There's no indication of a change in the direction of the uptrend. And MACD, of course, is still above the zero line, although we've had some slight weakness here pulling back to the zero line, but that is not uncommon at all, and it doesn't change the picture unless we had a divergence, and we don't. So the weekly chart of the NASDAQ is very bullish, and as we know, most experts think that the NASDAQ leads the rest of the market. If that's the case, this looks good for the future. Let's take a look at the daily. Here's a daily chart of the NASDAQ composite. A couple of things here. We can see that NASDAQ had the instantaneous trend line crossed by the Kalman filter, and so that signaled an uptrend here. Resuming the uptrend on the daily chart, we can see that we have one of those bullish haramis here, so that looks pretty bullish. Parabolic is still below the most recent bar, and that's bullish. No indication to reverse this uptrend. MACD, the fast average, is above the slow average, and MACD is slightly above zero, but at least it's in bullish territory. As far as the Jerry Appel's sum of the rate of change indicator is concerned, we can see that it made a false breakout here, but since then, on Friday, it crossed back up above the 4% line. It is a signal to go long the NASDAQ again. I would wait for a few days to see what confirmation we get before I would buy back the TQQQs. Let's take a look at some other charts. Here's a weekly chart of the S&P with CCI, Commodity Channel Index. And last week I mentioned that we did have a zero line reject here. We sort of went flat last week, and I would prefer to see a steeper angle of ascent of ascent like we saw here before I get too much more bullish on the SSO. I do have some SSO. I would like to add to it. I'd like to see a little more action on SSO before I jump in with more of my money to buy any more stock. So let's take a look at something else. Okay, here's the best choice chart showing the S&P and the regression channel. The extremes are 90% and 10%. Typically, when the S&P gets to one of these extremes, it tends to rally, okay, from here to here, from here to way down here in June, and so on. Right now, we're at 27%. So there's room at the top, so to speak. Interesting to note that this extreme here at 90% is exactly at the 22, 22, 22, 25 level. So it's quite possible that we get a nice rally up to this level here. Time will tell. Listen, have a nice weekend, and we'll do this again next week. But all signals seem to be go for the S&P, to the market to go up further.